Welcome, my name is Eric Martineau, and this is part 2 of a 2-part series about private equity banking and the benefits thereof. In part 1, I spoke about what were the generic benefits of private equity banking. In this part 2, I'm going to show you how to use the basic principles of private equity banking using real case studies. Here are the 6 benefits of private equity banking. First, tax-free growth and tax-free use of your money for life. 2, guaranteed returns with 0 market risk. 3, liquid cash. You don't have to wait until you're old and gray to get at your cash. You can get it anytime you want. The 4th benefit of private equity banking is protection, both from creditors and lawsuits, as well as unpredictable economic events, those ups and downs in the market that none of us control. The 5th, compounded interest. Our money grows. Compounded interest coupled with tax-free growth is a fabulous tool. And then there's arbitrage, the 6th component. Very, very powerful. The ability to have our money working for us in 2 places simultaneously. Can't get that anywhere else, and tax-free. So I'm going to show you how you can utilize this arbitrage to increase your investment. In part 1, I stated that private equity banking is not an investment, it's a tool. In Tony Robbins' book, Money, Master the Game, listen right here. Tony Robbins says, I had an immediate aversion to the words life insurance. Like most, I'd been sold retail life insurance, and I wasn't going to be taken again. And then his attorney said to him, Tony, this is not your typical retail life insurance. You can't just buy this off the shelf. Think of this as an insurance wrapper to place around your investments. You see, his attorney thinks like I do. This is a toolkit. Private equity banking is a toolkit, a number of tools that you can use to improve or enhance your investments. So I'm going to change my definition from part 1 to part 2. Private equity banking is not an investment. It's a toolkit to enhance and improve your investments. Problem is, like you know, there's no user's manual. Why is that? Remember what Tony Robbins' attorney just said. She said, you can't just buy this off the shelf. Each policy is crafted around your goals, your finances, and your health. That's pretty private, isn't it? So what ends up happening at the end of these things is I have a fiduciary responsibility to make sure that I keep your goals, your finances, and your health private. And so I've built a lot of these things, and I've crafted them around a person's goals, their finances, and their health, but I don't go running around showing people. It's not like as if I sold a solar system to somebody and I can say to the Joneses, hey, look, I just got that for the Smiths. Look at that. I can't do that. So in making this how to use portion in part 2, I'm going to change the names, but I'm going to keep the prospectuses the same. So I'll show you real live illustrations, but please understand, I'm changing the names, not the numbers, to protect those that I've worked with in the past, again, so that their goals, their finances, and their health are not compromised by me by showing you how these folks have utilized these tools. But I hope at the same time you'll be able to look at it. So let's call this other people's user's manual, right? But again, it's changed. Now, in grabbing other people's, let's say I'm using $20,000 as an example. You might be thinking, $20,000? Are you crazy, Eric? I don't get out of bed for $200,000. Why don't you show me examples with $2 million? Or you might be thinking, $20,000? Are you crazy? I could barely do $2,000. Let's do $200,000. I don't care where you're at. If you need to add 2 zeros or subtract 2 zeros from my examples, please understand the examples and the ideas will work whether you add a 0 or subtract a 0 for your financial situation. It's the concepts I want you to see on how to utilize the tools of private equity bank. So what I want to accomplish today is to show you how to get out of bad debt while still utilizing other people's money wisely. 2, how private equity banking can help you outperform the stock market with 0 risk. 3, how you can pay off structured loans with non-structured loans and lower your interest rates. I'm also a loan officer, A structured loan is what I give people anytime they want to buy a home. You have to make that payment on the first of each month. It's a structured loan. But inside of a private equity banking policy, even though you can borrow and use your cash value as collateral, what you borrow from the general fund of the insurance company is a non-structured loan. You never have to pay it back if you don't want to. If you want to make 3 payments in a month, make 3 payments in a month. If you want to make no payments in a month, don't make any payments. That's what I'm talking about. Again, very powerful tool when utilizing private equity banking. The next one, protect your business and your business's assets from the unpredictable and the uncontrollable. Let that sink in. You can get real estate, vehicles, equipment, it doesn't matter. And by owning them, but owning them through your private equity banking account, guess what? They are now protected from the unpredictable and the uncontrollable. I'm going to talk about this one at length. Don't pay cash and drop your savings to zero. Combine lost opportunity cost, which is what happens when we spend our money down to zero. That money is gone forever. We can't use it again. We're going to combine lost opportunity cost with arbitrage. So we have 2 pots of money, one that's always growing and one that we can use to leverage in other investments that as we pay it down, this one has kept growing. Okay? So we're going to use our money twice. Invest in real estate and receive higher rates of return and less risk. I'm a real estate guy. As I said, Diane and I owned 16 rental properties at one point in our life. That was going to be our retirement. And because I didn't have a private equity banking account, I lost all of that. Okay? So I'm going to show you how to invest in real estate, get higher rates of return, and have less risk. Invest in businesses or new businesses. If you're an entrepreneurial person, how to invest in new businesses and get higher rates of return with less risk. Also, build a predetermined, tax-free retirement income for you. A lot of people think life insurance is like, well, I can't use it during my life. It's only good for my family in the future. Not the case with private equity banking. Remember, you can get back to that cash anytime you need it. So if you want to tell me how you want your retirement income to look like, Eric, I want to take $70,000 out. I want to get to age 65, and at that point, I want $75,000. I want 135. I want 25,000. Again, the numbers don't matter. You can build a predetermined, tax-free retirement income using private equity banking and still have access to that money between now and then. And then lastly, build a predetermined, tax-free legacy for your heirs. You tell me, Eric, I want to have $5 million or $25 million or $50,000. Again, the numbers don't matter. You tell me how much you want to leave to your heirs, and we can build something so that at age 75 or whatever, you're there. You've got that money and you know it's going to your family. I want to give you a user's manual for all the tools that are available for those of us that have private equity banking accounts. So let's look at the first example, a 401k and the stock market. You're going to be able to outperform the stock market with zero risk. Watch this. I already did a video on this. You can go to my website, privateequitybanking.com, and you can watch this video that I've got out there, average market returns versus actual market return. What I've taken here is the Dow Jones and the S&P for the last 20 years. They're averages. And as you can see, 5.76 and 5.6 respectively. When we're talking averages, when you hear your financial advisor talk about, well, this fund averages 8%, this fund averages 11%, oh, we have a high yield and it's at 14%, it averages 14%. What they are doing, this is financial math, is they are taking the arithmetic sum of the gains and the losses on each year and then dividing by the number of years. So if we've got 20 years there, they start with a negative 6.2, then a negative 5.38, a negative 14.5, then they add in a 20.94 and a 3.4. They divide that by 5 and they say this is our average for 5 years. That's a bogus number, and I go through and explain why that's a bogus number in that other video. Watch it. But this, for our purposes today, understand when you hear average from your financial advisor, they're just talking about the arithmetic average across a number of years. And when I showed this to somebody, they said, Eric, we don't want to start in the year 2000. For heaven's sakes, 9/11 happened in 2001, and we couldn't have controlled that. Yeah, that's why we use private equity banking. There's going to be another 9/11. You're not going to be able to control it. And that's the whole point. But for the purposes here, I decided to take the S&P over 30 years so that I could avoid starting in 2021. And I took $1 million and I dumped it into this account. And I know there's many of you out there going, wait a minute, I don't have $1 million to start an account with. What I'm trying to show you is that when you actually put real money into one of these things, that arithmetic average, which right there is at what, 9.5, that is inaccurate. When you put in real numbers and you put your $1 million in, and in first year it drops by 7.1%, you've just lost $71,000. And so the next year you start at 936, right? But that one gains 21%, so you gain $201,000. And so the next year you start at 1,074,000. You get the idea? When you put real numbers into these things, it changes from an average return to an actual return. But to be real honest with people, what your financial advisor usually doesn't talk about are the miscellaneous fees and your taxes. So what I've added in here is 1.5 in miscellaneous fees. Not miscellaneous, really that's what financial advisors want, right? They want money under management. And they get paid 1.5 to 2.5 or more every year for the money under management. In this case, $1 million. You don't get that, by the way, with a private equity banking account. So it's not like money under management. And then you got to have your tax bracket too, so at 25%. So we put it into the real world, put in our taxes, pay them, and then our miscellaneous fees. The actual return that we get at the end of this 30-year period is 5.02. I just got a policy for a gentleman that is offering this year 5.2, right? Now, some of you are saying, I didn't have the $1 million to throw in there. So let's do an example with dollar cost averaging. That means I take $10,000. So say you're just making monthly payments each month and they come out to $10,000 during the year, and I'm going to throw that in there. Well, when you do it that way, the actual return even drops further to 4.78. Folks, this is what private equity banking can do for you. We've gone over many of the tools. 1, get out of debt while using other people's money wisely. 2, outperform the stock market with 0 risk. 3, pay off structured loans with non-structured loans and lower your interest rates. 4, protect your business and your business's assets from an unpredictable and uncontrollable events. Your real estate, your vehicles, your boats, your cars, your planes, your equipment, all of it. We've also shown how not to go and use cash and take your cash away and lose your opportunity cost. Use arbitrage instead. Use your money twice. Very powerful. Invest in real estate with higher rates of return and lower risk. You can also invest in businesses and new businesses and get higher rates of return with less risk. This is probably the most important, well, next to the most important, I guess. Build a predetermined, tax-free retirement income for you. I know a lot of people think insurance is for once you die. You just saw 2 examples where these people were able to build a predetermined, tax-free retirement income. And then also build a predetermined, tax-free legacy for your heirs. This is what you get with private equity banking. I look forward to helping you. Get a hold of me, let me show you, let me craft with you something that fits your goals, your finances, and your health so that you and your family can take advantage of private equity banking. I look forward to helping you. Thanks. Scenario.